Now in today's market analysis, we'll be running over a few pairs very quickly. Now before we get started, I would just like to state that as always, all content posted on this channel is for educational purposes only. Now the first pair I'd like to have a look at is New Zealand dollar CAD. Now this trade was for a bit less than a 1-to-2 risk reward ratio, and I did get stopped out in this position. It was at break even though. Now the reason I believe I got stopped out at break even is because I moved my stop loss to my entry point a bit too soon. We then pushed up a little bit higher, tapping my stop loss, and then pushing back down, hitting my take profit for a bit more than 120 pips. Now, if we look roughly around here, December 2016, we can clearly see that this was the start of our descending trend, where we bounced off our descending trend line 1, 2, 3, and 4 times. On the 4th time, we had a clean rejection of our reversal zone right here. I entered in at 0.9237 with my take profit at 0.9111 and my stop loss at 0.9305. Now, as I said, this trade was for a bit less than a 1-to-2 risk reward ratio. We also had an oversold signal from our stochastic oscillator. Now, the next pair I'd like to have a look at is US dollar JPY on the 4-hour chart. Now, if we zoom out very quickly, we can clearly see that we've gone into a period of consolidation within our symmetrical triangle. We've then tried to break out to the downside, but failed to do so as we were met with our support zone right here. Now, this trade was placed for a bit more than a 1-to-1 risk reward ratio, and we did hit take profit. Now, if we zoom back in, we can also see that we had an oversold signal from our stochastic oscillator. My entry point was set at 112.38 with my stop loss set at 112.08 and my take profit set at 112.71. Now I'll just run you through the fundamentals on why I took this trade very quickly. We had the US crude oil inventories come out at negative 7.323 million versus negative 0.942 million consensus. Now the next pair I'd like to have a look at is New Zealand dollar Swiss franc on the daily chart. Now if we go to the weekly chart very quickly, we can clearly see that we started our descending trend back around July 2017. We then bounced off our descending trend line 1-2 times. We also have an oversold signal from the stochastic oscillator on both the daily and weekly charts. Now if we go down to the daily chart once again, we also have a bearish pin bar right on our trend line, and that is where I entered. Now this trade was for a bit less than a 1-to-1.5 risk reward ratio, and I had my entry set at 0.6915 with my take profit set at 0.6826 and my stop loss set at 0.6975. Now this trade did hit take profit. Now in terms of news, last week Theresa May was held in contempt due to being disobedient in a court of law. Now the reason she was held in contempt is because she refused to publish legal advice on the Brexit deal. The Brexit deal vote for Theresa May's plan is due to be held on the 11th of December. Now in terms of the economic calendar, we have the year-on-year third quarter GDP figure release and the month-on-month GDP figure release for the GBP. We also have the US core CPI month-on-month for November, as well as the US crude oil inventories and the European Central Bank interest rate decision, as well as many other figure releases throughout the week. OPEC have agreed to cut supply more than expected, and the cuts are due to start in January for a period of 6 months. However, the final decision was delayed as Iran was reluctant to support the deal as they are still under US sanctions. Apart from that, please like, subscribe and comment. Thank you for listening.